Hey traders, checking into the stock market today. Bulls continue to wow with continuation and no sign of consolidation today in most of our major sectors. Let's see where we stand as some FOMO starts to creep back into the market. All right, so starting with the S&P 500, no consolidation. And it was fairly clear early this morning that bulls had complete control. We started the morning with the financial sector, instantly lead bull, shot right up out of the gate. So, okay, Team Bull, XLF. We then watched QQQ. Is QQQ going to join? Because XLV was weaker. So XLV Healthcare on the bear side, XLF clearly on the bull side. Where's QQQ going to go? And it took about a half hour, but as soon as we saw a new high of the day after a bull move, gave a lot back, but then that new high of the day joined Team Bull, and from that point forward, it was full bull control for the rest of the day from there. So again, the burden is on the bears in the short term, and they just aren't proving anything. And the simple guide for me is if the S&P 500 futures chart and the NASDAQ futures chart, if their 4-hour EMA 12 is support, we're not going to see daily consolidation. So the low yesterday bounced off that level. We've got space now where we can pull back and still be holding that. So that's what I'm watching over the next couple of days. How long can bulls maintain 4-hour EMA 12 supports? Looking at the daily time frame for both, bull cross of the 12 and 26 EMA. That's the first time that's happened since all-time highs. So that's notable as well. And again, we're at this point, I don't remember what video I talked about it, but when I was talking about the reason I was establishing bullish positions in the face of weakness was because of the amount of times that I've seen the broader market V-shape bounce out of nowhere and leave me in the dust with my jaw dropped saying, I can't believe we just reversed momentum that quickly. And now here we have done it again. This is the first time I have ever benefited and positioned well for this to take place, being mostly a day trader, but saying, all right, as a swing trader, I've seen this enough where I'm at least going to give myself the possibility to have positions if it happens again. So every day that we go up over the past couple of days, I'm just imagining that there's some more bears that are flipping their mindset and changing their minds with the price action. And there's more people on the sidelines with their cash that are jumping back in. And what I'm going to be looking for very closely on this consolidation is what is the retracement size? How aggressive are bulls buying the next dip? And does it result in very quick higher highs? Because if we pull back to a daily bull flag and then see continuation, then that confirms to us, yep, a lot of money on the sidelines looking to jump in. And that's what I'm watching. So again, no sign of daily consolidation, but when we see it, I want to see what's the retracement size? What's the volume like? Do we see hourly oversold conditions? Do hourly oversold conditions mark our daily higher lows? These are all things that I'm going to be watching for. So, nice follow through for the bulls. At this point in time, again, I have been positioning for daily consolidation, saying, okay, my Tesla swing position's up 25%, 20% in just a few days. So I need to protect against that because I'm going to hold it through daily consolidation. But again, we just keep going up. So today that hurt me a bit. Yesterday, I lucked out because I chose to short SQQ. I chose SQQQ as my protection, but I also chose NIO short. And NIO dropped 8% first thing in the morning, and it gave me a lot of wiggle room to work with. I mean, that gave me complete control of the day where I've got my bearish position and my bullish positions keep going up. Today, it was the opposite. So I did have some NIO bearish position overnight that I had to bail on in the morning as soon as this double top broke. And so that hurt me today. Account's still going up, but I did not see the total amount of gains that my swing positions had because I did take some losses on my protection positions. But again, my account's going up on a daily basis. So I'm still having this mindset where I am not taking any profit on any of the swings that I have at this point anymore. And I will be holding bearish positions for the daily consolidation when it happens. And until then, my account's not going to fluctuate in significant moves. Essentially, I'm just protecting the nice upswing that took place over the last 5-6 days. So that is my approach. Whenever you hear me talking about bullish or bearish positions, just keep that backdrop in mind. It's because I am going to be holding this Tesla position for perhaps an all-time high. Who knows? I'm taking it one day at a time at this point, now that the monthly higher low is set, which we'll look at in just a moment. So NASDAQ, same deal, bulls in complete control. And again, just watching to see how many shorts are being put underwater. And every move up, every level that we take out is another round of shorts. So we cleared 357.09. So we got to the highest price today in 6 weeks. So that is 6 weeks worth of bears underwater at this point. A little bit more on the S&P 500. Got to adjust for the dividend, but roughly the same, 6 weeks. Key level on SPY, adjusted for the dividend, double top at 456.70 incoming. Best case scenario for the bulls on daily consolidation will be to hold the EMA support on a back test. That would ensure that retracement is healthy. What about volume? I don't care about SPY volume for the bulls. I learned that lesson 2016, 2017. How are we grinding higher on a consistent basis with volume dropping lower? And I learned that volume for SPY and the ETFs are not the same as volume on individual names. Volume matters for the bears, didn't matter for the bulls. And I'm just keeping that mindset because as soon as I came to that realization and just accepted that that's the way it is, things became a lot easier and I was a lot less confused. So that's where I stand with regard to SPY volume. Semiconductors showing some relative weakness and an upper wick today. So it was actually very notable to me, the weakness that we saw in semiconductors. And I may be looking to short semiconductors if we see any QQQ weakness tomorrow. The reason being, and again, this is something that I observe on a daily basis because I'm constantly at the computer and I'm watching tick for tick. I'm just seeing who's stronger, who's weaker. But if you're not staring at the screen and if you're trying to check in, utilize SMH divided by QQQ to compare how names have responded to each other. And I can see over the last 6 days of the bounce, the first 2 days, semiconductors blew QQQ out of the water with a big move up. They led the bounce. Then nothing happened for 3 days. They were very similar to each other, nothing changing. Today, a very notable change where semiconductors were very weak, much weaker than QQQ today. And if you look at individual names, you can see NVDA. So stalling out, getting bulls looking a little bit tired here. Just upper wicks, not much follow through, and just set up well for bears if we see broader market consolidation. If we see QQQ consolidation, NVDA is ready for that pullback. And again, NVDA divided by QQQ. We can see a notable change today compared to the last 5 days. And AMD is weaker as well. You can see really the last 5 days, not that impressive. We are lower than the high of Wednesday, last Wednesday. And if QQQ were lower than the high of last Wednesday, we would be trading down here. So I am just recognizing semiconductors weakening comparative to QQQ and perhaps going to utilize that information for a bear trade tomorrow. We'll see how we shape up. And for SMH, we're coming off the low. We will have to confirm a daily trend change if we're going to believe that this bounce is going to have follow through. We are still in a weekly downtrend at this point. Must set the daily higher low and higher high once we lose the pattern of a higher low every day, which is still intact. Tesla monster move today. Massive follow through. It's taking everything in me to not sell my swing position. Again, I've already taken profit. That's the only reason I can, because I have taken some profit on the way up. So I'm in a position that can't lose, but I like where my account's at. And if we drop 5% on daily consolidation, again, that's going to bring my account down. And I hate drawdowns. I love higher every day. That's my goal. So I will hold Tesla until I get red flags. Monthly higher low is set. Long-term uptrend intact. The only way that this chart is going to have a major red flag is if we confirm a monthly downtrend with a lower high and lower low. So that is the only thing that's going to give the long-term chart a red flag for me. I do anticipate that there's a possibility we set a monthly lower high and tighten up. But if we look at it from the weekly perspective, weekly trend change confirmed to the bulls, cleared a key level today, that wall, that pesky wall right in the 940s, we blew through it, we got over 987, we're now looking at 1,000 and then 1042 as the next major level from there. Tons of space for the hourly higher low. And again, I look at this chart and this just screams to me, I look at the price chart, it shows me human emotions on this chart. And I look at this and I see FOMO. This is FOMO. So I'm going to be watching for hourly oversold conditions to be the next buying opportunity for bulls who are going to be scouting a daily higher low. And I expect, You know, it's not your ideal back burner trade, but I do expect that there will be a lot of bulls looking to buy next oversold conditions in Tesla. So maybe I add back some of my swing position that I took some profit in next time that shapes up. But overall, again, it's just looking at SPY, and the question is this a 2-month bull flag? Because this chart, there is absolutely no red flag to me whatsoever. And if it is a 2-month bull flag and we're heading back to all-time highs, then Tesla can certainly hit all-time highs as well. And right now, SPY, adjusted for dividends, all-time high resistance is less than $30 away, and we're over $40 off of our low. So again, every day we're just creeping closer and closer. The bounce retracement size at this point is approaching 60%. Let's get the exact number. Yep, it's approaching 60%. And really, the only major red flag for me at this point would be to confirm a monthly downtrend. So if we fail the all-time high and then roll over and break the low, then that's a huge red flag. And I will change my tune very quickly. But that's a long ways away. And again, I look at this, and what has benefited me as a trader significantly has been numbing out the key words of war, inflation, recession, rates, FOMC, Fed. That's how I trade. I ignore all of that. But then I think about, okay, this is the market's reaction to a significant increase in the probability that there is going to be a higher hike in early May. And if the market's going to go up on that news, what would it take to drop to fresh fear lows from here? We would need something that would surprise the market, something that the market is not anticipating, and significant, in my opinion, to shift the momentum that the bulls have now regained. The scales are tilting again, where it was everybody on one side of the boat, bearish, the boat flipped. And this bounce is the boat flipping. And the boat has not normalized again. And really, what will make me more cautious is when I follow social media. You know, I put a lot of work into Twitter with who I follow. And when I start to see the mega bears, I'm watching the mega bulls and I'm watching the mega bears, and I don't want to be either of them. But I'm watching the mega bears to see when they capitulate, when they sell their positions, when they say, okay, this is more than I thought it was going to be, and this is bulls regaining control. That for me is going to be a little bit of a red flag, because again, then we'll start to have everybody going towards the bull side of the boat. And one reason that helped me stay with conviction looking bullish a week ago was the fact that everybody was so bearish. And so if everybody starts becoming bullish, it's just a little caution for me. So that's how I'm approaching the market environment right now and where we stand. But again, just the fact that probabilities for a 50-point raise in May went from 44% to 60%, and the market saw another leg up. The market doesn't fear those incoming rate hikes, in my opinion. It seems like they're priced in. All right, where did we stop? So hourly uptrends are guide on Tesla. XLV sideways, pretty much nothing going on the last 2 days. Higher low everyday pattern for the last 7 days. So an inside bar. If the inside bar today breaks bear tomorrow, daily consolidation will finally be underway, and we'll scout a daily higher low with tons of space for it to form. Tons of space for a weekly higher low as well. We did confirm the weekly trend change. It was a nice little inverse head and shoulders. And again, the inverse head and shoulders is just a downtrend changing to an uptrend. So very healthy still. Again, all-time high, $6 away, $5.50 away. Fear low, over $12 to the downside. Financial sector continues higher. Higher low everyday pattern for the last 8 days now. And again, I've been watching it on the 2-day time frame, so scouting a lower high compared to 41.39. Then we'll scout a higher low with plenty of space for it. But bulls not topped out yet. IWM showed some weakness today, relative weakness in growth. Broke the high of Friday, or the high of yesterday, not much follow through. And 209.05, stubborn, we rejected from that by 26 cents. So that is still a double top that we need to be keeping an eye on. And we'll look for a daily high or low when we pull back from here. One thing I'm watching for is, along with this, the shifting sentiment and watching, social media and the market and watching to see what are bears doing, what are the bulls doing, what are people on the sidelines doing. I'm watching for confidence to return enough to the market for the higher risk, higher reward sectors like crypto, like cannabis, to gain attention. And IWM is a representation of that as the growth sector. So I look at ARKK and say, okay, it's a nice bounce, but still not strong. Big picture, tons of work to do. But you look at names like GME. Look at what GME did today. 30% rip on GME. $500 million of shorts squeezed out today. And AMC did it as well. Not nearly as strong, but a big bull move. So the question is, all right, so money is flowing back into these names. I mean, is confidence returning to markets to be throwing money at the wall back in the heyday when people were throwing money at anything that moved? Maybe. If we see Bitcoin break a key resistance level that's being tested, if we see IWM continue to gain confidence, again, it's just all little pieces of the puzzle that I'm looking to gauge big picture market sentiment. Biotech sector was the lead bear yesterday, fully recovered today with no broader market weakness, but still testing the highs 92.78 of this bounce. We now have a short-term support level at 88.46. And if we break resistance from here, is that a daily trend change for me? No, it's not a clear enough pivot coming from a prolonged many-month downtrend. It's one of those instances where I say, okay, that's not very clear for me on the daily for a trend change. Pull up the 2-day time frame, smooth it out, and that's what I'm going to use. So not a clear enough pivot to call it a daily trend change. I just view it as weaker yesterday, but bears couldn't follow through because none of our major sectors were weak. And so bulls resume their bounce attempt. Solar sector, triple top of resistance to be keeping an eye on. 77.73, 77.81, 77.77, triple top. Hourly uptrend is key from here. If we were to drop down and break 76.32, it's a red flag for bulls to lose the hourly uptrend with a triple top at daily resistance. We will still be looking for a daily high or low with plenty of space for it to form from there. But that's a potential top fishing play to be keeping an eye on, but I would only be confident in that top fishing play if we saw signs of weakness in the broader market, which again have not been present. They were partially present yesterday, but short-lived and not at all today. Who else do we need to look at? Facebook bull saw a nice leg up, inside bar bull break. Still have to confirm a daily trend change there if we're going to see notable follow through. I'm targeting weekly EMA 12 for my swing position. It's going to drop down next week. Dollar, watching for that daily lower high, just a continued tightening range. Just waiting for a break. Metals, weak with stock market strength still. So 12-hour downtrend continuation for gold. I'm still in the positions I started yesterday as long as support holds. But again, if these daily bear flags confirm, I wouldn't expect a lot of follow through. But again, if you confirm those daily bear flags, the weekly retracement size at that point is a red flag. So bulls really want that weekly high or low to be set. Have to hold the low, fend off the daily bear flag, and break resistance. Silver, same thing, got closer to support. So close to confirming daily bear flags. And miners holding on still. Key support for GDX is 36.97, still stronger than the metals themselves, benefiting from the stock market move up. And oil, equilibrium hourly. Volatility this morning, again, big drop, big bounce, scout the equilibrium. It shapes up very nicely. It's going to break overnight. If it breaks bear, we scout a daily high or low. If it breaks bull, then we have not topped out just yet. But just like the hourly gave us an equilibrium, we're looking for the same thing on the daily. Natural gas is strong. Uranium names, consolidation day, pretty much just an inside bar, sideways, uneventful day there. So for me, on a daily basis, sticking to day trading, watching for consolidation, watching the retracement size. And essentially at this point, I'm watching for the bears to prove to me that I should not be looking for a SPY all-time high over the next couple of months. That's where I stand with that SPY 2-month chart and what I've seen over the last week. So I'll be open to it, and I'll be looking for signs of it. But probability needle, if we consolidate and form a quick little higher low and see a continuation, trend changes, my probability needle for a SPY all-time high is going to kick up a solid 15%. Where am I at right now? For an all-time high over the next few months, I'd say, I don't even know. I'd say 50-50. I need to see what this consolidation looks like, and I will go more likely than not if we set a higher low and higher high on the daily next time we consolidate. So that is where we stand. All right, do good things. Feel free to ask any questions. See you tomorrow.
In this spot next to the rhubarb, we're going to do some poppies, keeping in mind that this rhubarb is going to get a whole bunch bigger, so we got to give it space. These are leftover potatoes from last year, and a bunch of them are already starting to put out root systems. So the cool thing about potato spuds are, if you cut a piece, all you need is one eye on it, and that can grow into a potato plant. So this in itself, I could cut up and have, probably 8 different plants from this one potato. Now we take all the smallest ones that are left and stick them in the compost pile. Why not? Maybe we get something.